Welcome to the Ideal Investor Show. This is the podcast where we help you challenge your mindset and discover where you are. Tired of stories about other people's success? We can help you change your life, determine your time freedom point, and join us on the journey to financial success. Let's go. Hello and welcome to another episode of the Ideal Investor Show, where we bring you interesting guests, interesting information on places to invest and what kind of investments are out there and what we can do with our money. And maybe also sometimes some things that you may not have ever really heard about. And we have today Kyle Kuderewski with us, who is one of those interesting people who do stuff that not everybody knows about. Kyle, welcome to the show.
Hey, Axel, thanks for having me. Yeah, excited to be here and discuss some of those differences.
Unique. You want to call it unique.
There you go. Yeah.
Now, before we get into that, Kyle, I would like to ask you, for our audience, to get to know you a little bit, to tell us, like, how did Kyle get to where he is right now? What is kind of like a day or a week in Kyle's life look like right now?
For sure. So grew up here in Tennessee, in the United States. I like to say engineer turned investor. So I went to engineering school, did my master's, and enjoyed a good corporate engineering role for about a decade, which treated me well, and definitely thankful for. But I always knew that I wanted to branch out on my own a bit, and so I started to get really educated about different investing avenues. I know we're going to go into detail on those, but I got involved in real estate, vacation rental real estate, and in the online business world. So we'll talk about all those different kinds of online businesses. Now I work for a company called WebStreet, run a remote team. So we do enjoy a unique, it's not as unique as it used to be post-COVID. A lot more people are at home or remote, but we've always been fully remote. We enjoy traveling, getting together with a team once or twice a year somewhere in the world, working and strategizing together. Other than that, on the personal side, I just have a real passion for life, I guess you would say, just staying active, triathlons, snowboarding, skiing, playing with the dogs, going to the beach, anything outdoors that gets me moving and keeps the mind busy. Golf as well. I should have thrown in there. I'm terrible at it, but I do like to play. So yeah, I don't know. I don't have too normal of a week. I just try to do something active every day, do something fulfilling at work, and enjoy my family.
Yeah, that's very cool. Now, you said you kind of converted from being an engineer into investing and getting interested in investing. One of the things that I find, at least I would say this for myself, to be somewhat of a struggle is when you actually decided, okay, I want to do something in creative investing, how to find, so to speak, the people that have the necessary funds. And especially when you're doing something new, and I would venture and tell me if I'm wrong, but it sounds to me that WebStreet's approach is relatively new compared to other things in investing. How do you find people, and how do you convince them that what you're offering is worth them investing?
Yeah, you're certainly right. For many, many years, people just followed traditional, if they're doing any investing, doing traditional ETFs, 401ks, et cetera. And then alternative investing is, alternative investments seem to have become more popular. Get a lot of that changed with SEC regulations, where you could do fractional ownership of real estate or art, things like that, wine, et cetera. So our model isn't new in that sense, because we, maybe there's some unique qualities or whatever to our structure, but generally speaking, we offer fractional ownership. What is new is that nobody was offering it in the online business space. A lot of us think of the internet as being around, it's been around most of my life. I'm 35 years old. Think of it being around for forever, basically. And, the truth is, a lot of people still don't understand how websites make money, how Amazon sites make money, how Kindle sites, these softwares that we all use and pay recurring services for. That is a roundabout way to say that when we started to offer that in a fractional way, people have really jumped on board very quickly. And one more thing that is definitely worth pointing out is we birthed from a brokerage called Empire Flippers. So Empire Flippers is a brokerage for online businesses. If somebody wants to, I build a site, I want to sell it, Axel wants to buy it. One avenue to do that would be through a brokerage. And they've been around for over a decade. They've done over 500 million in businesses sold. So they had a huge following, and we birthed out of that company because people were asking to invest versus run the businesses. So we kind of started with a pretty big interest base, if that makes sense, and we're just growing from there.
Okay, and that's cool. And that interest base, were that mainly the people that were already successful in that space? Because I know from your website that you're basically looking for accredited investors, which has obviously a bunch of criteria associated with it. So would that be true?
For sure. Yeah, I think generally speaking, it's very true. Yeah, we do offer to accredited investors, which the most common way is over 1 million in net worth or over 200,000 in income. There's other ways, of course. But yes, generally it was people that had maybe bought or sold, a website, multiple websites, or people that were just interested in it. So they came, they thought they had the money or they had the money. Those sites often sell from anywhere between $50, $100,000 and many, many millions of dollars. So people that were interested in doing that, but maybe for whatever reason decided not to. Right? They got into the due diligence and realized, well, this is much more complicated than I thought, or this is going to take much more time than I thought. A lot of entrepreneurial tech type people either had bought or sold businesses before were interest based.
Okay, that's very cool. Now, before we go a little deeper and look at what is it really, how does it work, and so forth, you said at the beginning that you, in that transition from being mainly engineering focused to more investing focused, also invested in real estate. What triggered that? What got you into that?
So I'm a big believer in following market trends, right? So with the, one reason I think a lot of people can relate to this, that coming out of college, I didn't have any money, right? So that's what kept me in a stable corporate role for many years, saved up money for a side hustle, and I didn't know exactly what I wanted to do with it. Well, I bought the property that I live in now, and just put most of my savings into the property. So I was trying to recoup some money. With a small mother-in-law suite above the garage, I threw that onto Airbnb. Um, just without much effort at all. Just put it on there. Maybe I can recoup some money here and there. And it stayed sold out every weekend pretty much. And that told me like, okay, there's a lot of potential here. Maybe you want to go into the vacation rental space. So followed that market trend, live over near the beach, bought small rental properties that still run today. I have, passively have a manager, but that's how I got into that. At that same time, that's how I discovered Empire Flippers in the online business world. So when I was looking at potential side hustles before I decided to go the real estate route, I looked at maybe buying a small online business, learning the skills to grow it. I thought that would be fun. I thought it would be beneficial down the road. Didn't end up going that route, but kept an eye on the space. And so then that's eventually, came full circle and I joined back into this industry.
Very cool. And are your vacation rentals all kind of like in the same general area? And if so, where would that be?
They are. So I'm on the East Coast of the United States near Savannah, Georgia,
Oh,
small
nice.
little coastal town. So yeah, we obviously have the built-in beach advantage. Yeah, that never hurts. So that's where they're at. And yes, they're all in the same area. I've been interested in doing some other areas as well. I grew up in Tennessee in the mountains. I know there's a lot of good markets there, but I was a little bit ahead of where the markets are now. Obviously there's still always good times to buy and bad times to buy. Right now, I'm holding off a bit just with interest rates and things where they are. So I haven't done much more. But yes, to answer your question, they're all in the same kind of area, coastal
Right,
area.
and from a few friends that have actually visited quite a few times, they all tell me the Savannah area in general, that whole, including the beaches and stuff, is a really pretty place. And so obviously it attracts people for vacationing. And I don't know if it also attracts digital nomads or something.
Yeah, 100%. Yeah, I love it here. This was where my first job was out of school, and when I came down to interview for that job, I was like, "Whoa, this is a pretty cool place." So I haven't left.
I always jokingly say that it's kind of like the area where the East Coast starts to become kind of warmer.
Yeah, there you go.
Right. Okay, cool. So let's talk a little bit. What is actually an e-commerce business? And I mean, I don't assume that you're talking about, at least not exclusively in things like Amazon, where there's just a platform from which you can order, but a true online business. Can you explore a little bit and explain what it is, with some examples maybe, and especially what the opportunity is?
For sure. Yeah, I'll try to talk about a few different what we call monetizations. Some of these have overlap, of course, and synergies, but yeah, so one would be Amazon FBA. Now, of course, Amazon makes a huge chunk of the profits that's fulfilled by Amazon, but most of those products that are sold on Amazon aren't Amazon products, right? So maybe I have a warehouse or have a supplier for whatever widget it is, so a certain pot and pan or something, and you decide you want to go buy it through Amazon. They do all of the storage, all of the shipping, and the whole thing's fulfilled by Amazon. So that became really, really popular during COVID. That's one popular monetization. There's also, while we're on Amazon, a smaller one would be Kindle Direct Publishing. So they really changed the publishing game for books, where anybody can go write a book. They don't have to get a big publishing deal with one of these, large brands, and they can publish direct through Amazon. Now, getting away from Amazon, go ahead.
Really quick before you go to others, would you say that Kindle idea is still working, or is that kind of overcrowded by now?
It's definitely still working. This is not an answer, but both. I mean, it's much more competitive than it was for sure, but it's still working. We have portfolio managers running those successfully, and it's not always just fiction book or a nonfiction book. Some of these are pretty unique, music books, coloring books, handwriting books, that type of stuff. So they have synergies with Kindle, and then they can also do, they show up on your iPad in the Kindle app, or they buy the Kindle book and it also comes with a hard copy. So there's ways to be creative to make it work, but it's definitely more competitive. And same thing for Amazon FBA. Anything on Amazon was kind of a gold rush, again, especially during COVID.
Yeah, why I asked about the Kindle stuff, because and I'm sure you have the same thing happening, or maybe even more. If you are in business, then certain people, marketers and what have you, constantly send me messages, and one of them that keeps recurring is from different sources about this Kindle marketing. And I've just been curious if this statement, like you find somebody on Fiverr who writes you a book for $5 and then you sell it 1,000,000 times for $20 and you be rich, in 3 months, and then you go to Kyle's Airbnb and just don't do anything anymore.
Or a step further, right? You just have an AI tool write it for you now.
Yeah, ChatGPT is writing it for you, and you give it to Gemini and get it completely screwed up.
Yeah. Yeah, I'd say the ones that are very successful at it, they've been doing it for years. They have a model that works. They know how to advertise. They already have their store already ranks very highly, right? So it definitely still works, but to your point, it is much more competitive than it was.
That was just a little bit on an excursion here. So if we take those as one bucket, you said now let's transition to the ones outside of like the Amazon Kindle environment.
For sure, yeah, and I'll try and go a little quicker with those. So another one, while we're talking physical products, would just be at what we call DTC, or direct consumer. So I have products in my garage or in my own warehouse. I build a website, or maybe I don't have the product on me, but I have a supplier. You buy through my website. I have it shipped directly for them to you, right? So that's called drop shipping, direct to consumer. Those models still work. A lot of people will do both. They'll do their own website, maybe at a slightly higher price, and then use Amazon as well. The next big one is content. So content can be affiliate ads or display advertising. I'm sure you know a bit about that. So top 10 travel backpacks, top 10 keyboards, top 10 whatever, speakers for my boat, review sites where, and there's some of these are huge, like Wirecutter, and they're just enormous review websites, and some of them are very niche down. So the way those work, generally, they might have some display ads. So per visitor, they get a certain chunk of change. And then per click, if somebody goes and buys their backpack that they were talking about, they would get an affiliate commission. So I think that one's pretty straightforward, but a lot of people they go visit these sites all the time and don't realize that they're paying the person an affiliate commission. And a lot, and the person deserves it. They've written a good article, they've done their reviews, they've done their diligence. So that's one.
The same way. The only ones that I really hate is that there are some out there where you don't know until you click on it, and then you see it's like so completely clustered full of ads that you can barely identify the content anymore. And I find that annoying. I really don't understand why those who own the sites or the URLs don't limit that, and maybe they don't limit it for themselves and they're not really in charge, but it's a little bit, I don't think the industry is not doing itself a favor when you basically turn people off to say, oh no, I'm never going to do that again. That's just super painful.
I completely agree. And some of the highest quality affiliate sites just won't even have display ads. So it's not always both. And sometimes it's not an affiliate site. There's other sites where you just go to, learn about history or learn about something, and they'll have display ads. So I totally agree with you, though. Overdoing it turns people off completely.
I mean, I don't mind if there's something on the side or at the bottom or in the banner or stuff, but when it goes to like, somebody writes 3 paragraphs and it takes you like 5 times scrolling to just get to the second paragraph, then
you definitely got out of hand for a while. I think it's swinging back the other way, but yeah, I completely agree. One or two other quick ones, and this one's really big, is SaaS, so software as a service. So a lot of people know that, like, we're on a Zoom call right now, right? That Zoom is a software that you pay monthly, and then there's a million of others of those. But these can be giant softwares like Zoom, or they can be very, very small, where you're paying $1 a month or a few dollars a year. So software as a service is really, really good as a monetization because of the recurring revenue. So you don't have to depend on repeat purchases, blah, blah, blah. Of course, there's always some churn, but generally it's pretty predictable in the nature of the recurring revenue once you acquire a customer. So we are only continuing to see that grow. So those are the biggies. There's a few, there's other models out there, but those are some of the biggest ones we see. Just general apps can be both, right? It can be app, can be a software as a service. But those are some of the biggest ones.
So if we were to take something like whether it's a review site or the last option that you were just describing, from a transitioning to, okay, so here is WebStreet. WebStreet is helping me or Kyle or somebody listening to us to invest in that. Can you go a little bit into how that looks like? How do you actually do some due diligence to determine which ones are investable and what is kind of like a good deal, so to speak, for an investor?
It's a two-part answer. So the first part is we do an extremely thorough vetting process. So we actually bring in professionals, what we call operators or portfolio managers, that have built and sold multiple of these types of sites before. So because of our Empire Flippers audience, that's one reason we have access to a lot of that big network. But at this point, we're standing well on our own, and so that's a big part of it, is bringing in the people that are actually going to run those businesses. Same if you built or we're doing apartment, like real estate syndication, right? You want the operators or the contractors renovating or whatever to have a ton of experience and track record. So that's one side. Then once we bring them in and the people choose, they get to look at their track record, they get to decide which monetizations they want to invest in. They go out to the marketplace and they find these businesses. So if we raised $1.5 million for them, maybe they were going to buy 2 or 3 sites, maybe they're just going to buy one large one. They lay that out ahead of time, but then they would bring that business to us as WebStreet and say, okay, I want to buy this business. And we go through it it's I'd call it 3.5-step due diligence process, where we have ultimate veto power on whether they're going to buy that site or not, what their growth strategies are going to be, what their negotiation strategy is going to be, right? The price they get it at is a huge factor in the success and the returns for investors. So that's the 2-part vetting and due diligence we do for the businesses. And then the way it works for investors, just very quickly, is once those businesses are acquired, they get 2/3 of the profit every quarter directly into their WebStreet account. So unlike a piece of art or wine or something where it may appreciate, that's what you're waiting on pretty much, is solely appreciation. These are cash flowing businesses from the start. And if they grow them the way that we've done in the past, they're going to appreciate as well as cash flow. So that's our model, and that's how we find the businesses. Does that answer your question?
Yeah, I can deduct from that how that actually looks like. One of the things I'm kind of curious about, and this goes back to me being, at least used to be, a pretty avid Shark Tank viewer, that one of the things that they, I think, rightfully oftentimes brought up is, how do you protect your USP if you have one? If I'm imagining somebody had an idea, he or she turned it into an online business, let's say, for example, an app or a software or something like that. Yeah. Right now with AI, I can basically tell ChatGPT or any of the other tools, make me a software that can do X, Y, Z in relatively minutes at the most, or even if I have to do a number of prompts to narrow it down to what I really want, relatively quickly I can have software. Now that's only the tool set, right? I'm kind of curious to, if I were one of those sharks and somebody came to me and say, okay, this is our business, this is all online, it's all digital and so forth. What would the answer be to, okay, why can't somebody else just copy that?
I think it's an excellent point and question. It really depends on the monetization type, right? But throwing that out, first of all, that's one of the things you really want to look at in due diligence is this a niche or a product that is easily replicated? Can somebody just go to another supplier in China and get a slightly cheaper product? Can somebody go to ChatGPT or whatever and build that software? So if the answer is even slightly close to yes, then we will not purchase that business. We actually just had an example of that on a SaaS software that we were very close to, we got into the due diligence on, and the operator determined, like, with the advances that AI are making, he did not feel comfortable moving forward. And that was, like I said, it was almost on the finish line. So we're always going to protect investor returns to the best of our ability. And if the way our model works, if once we get the money invested and we go to the marketplace, they have 90 days to identify and acquire the businesses. There's been many times where we haven't found businesses that we want or that the operator wants or feels comfortable running because of his skill set or team or whatever, and we just return that money to investors. So the third part of that is we do everything we can to protect those businesses. As an investor, you get quarterly reports along with your distributions. And you will know as an investor what sites or softwares or apps or whatever you're invested in, but those are not publicly shared until after the businesses are sold, which we do in the 2 to 4 year range after they're acquired. So long-winded answer to say that it's never foolproof, right? Somebody could always come in, but we do everything we can to protect those and to make sure that they're a niche or a product that is not as easily replicable.
Right. And then that kind of is a good bridge because you kind of touched on it. That would have been my next question anyway. And talking about the exit, is the goal, would it be fair to say the goal is to exit when the business has had very substantial growth, but is not tapped out or something along those lines?
Yeah, it's kind of $1 million question there. So
I'm thinking about a potential buyer. If an exit means we build it to a certain point and then we want to sell it, well, if it's past its zenith and 12 others are already in the starting blocks to replicate and compete,
right.
If somebody is halfway informed, they would probably not find a really good exit price, right? So there must be some sort of a balance between how much do we get from operations, or like you called it, cash flow, and how much are we ultimately making on appreciation?
Yeah, it's an excellent point. It's well thought through. So something we're constantly evaluating. Some of our operators that, online business operators in general have different strategies. When we're going to acquire businesses, we're generally looking for ones that are still increasing. Right. We don't want to see the trends decreasing. Now, some people out there would tell you the opposite. If they're very confident in their skill set and they think that their team brings something unique to the table, maybe they can find a declining asset and turn it around. That's generally not our philosophy. Now, I know your question was more around when do we look to sell and when's the right time for us, for the investors. It's a little bit more of an art than a science. It depends on the growth strategy from each operator. If his strategy was to buy 2 or 3 content sites in the same niche per se, and do a bunch of backlinking together, rank them for SEO, maybe do a YouTube channel, and he's done all of that and he doesn't think he can grow them anymore, that's the point where he wants to sell. Now, on the other side, it could just be, hey, I haven't done all that much for it yet, but this thing has doubled in 2 years because there was a Google update. And I think we should take advantage of it and go ahead and get the investors their returns. So I really don't like giving these kind of it depend answers, but it, a lot of times it does. What's going on in the market? What's going on with that product, right? Are you selling, hand sanitizer during COVID? Like, okay, it's probably time to sell just based on the market. Sometimes it's, I've tried everything I know to do to grow this business. It's either worked or it hasn't. And let's go ahead and sell and move on to the next thing.
Yeah, but I mean, I would even say, since we started with real estate and we're all about real estate, I don't mind ending on real estate. I mean, you have seen it, I have seen it, when there are 100 people lining up on houses and outbidding each other to ridiculous prices. Yes, you can make the argument at some point we will maybe experience something like that again. But I'm also of the opinion, if you have an asset that has far, far exceeded, even if the original idea was I'm buying it, long-term buy and hold, it's rented out and I make nice cash flow, and I can even, because of the economic environment, increase my rents regularly. I'm a living example of that, right? I got a phone call at a house in Santa Fe, New Mexico. It was rented. We lived in there for a couple of years, then went back to California and rented it. And then suddenly, out of the blue, the real estate agent calls and says, hey, have you thought about selling it? And do you know what happened to Refugio? And I'm like, not really. And what do you mean, what happened to Refugio? And which happened to be one of the a little bit more substantial roads. And anybody who knows Santa Fe, I don't want to go too deep, is basically it has one of those business circling feature, almost like interstate like roads all around the city. So if you don't really want to go in the city, you always take kind of like the circle around it.
Got it.
Where we were living and where that house was located, that major road was not connected to that business circle. So anybody who used that circle to go to work or stuff like that wouldn't buy a house in our neighborhood. So this agent calls me and says, hey, yeah, you know what they did? They connected it to the business circle. And now everybody and their grandmother wants to buy. I said, well, what are we talking, right? And she said, well, last year I told you could get maybe 200. This year I'm telling you, you get 300. I'm like, okay, yes, it will probably take 15 or 20 years and I get to 300 too, but if it's in 12 months, I think that's, like you said, like mass at the peak or shortly after the peak of COVID and stuff like that. There were many of those examples, right? Where even if your original intention was different, but I'm also thinking if it's a business, not an item, but a business item like an asset, like a house. But if it's a business, for me, there's always the balance between the buyer and the seller, right? If the buyer is buying it, I'm saying this with all due respect, because they're stupid and they didn't do their due diligence and completely overpay, good for the seller. But if you make the assumption that the buyer is also smart, equal as the seller, then there needs to be some meat on the bone. Otherwise, why would you spend money on it, right? So
yeah, for sure. And we have 35 or 40 assets under management right now. And the only real limitation is we wouldn't sell in under a year, right? Even if I bought it today and tomorrow, it capital gain, short terms, et cetera. But other than that, we're constantly evaluating all the brokerages, all the different niches, all the monetization types, what's going on with those particular businesses and P&Ls, and just trying to make the best decisions for investors. Doesn't mean that we're going to get it right 100% of the time. I mean, nobody is, but it's something we put a lot of effort into.
Yeah, absolutely. And I mean, the tax implications obviously play into the numbers and the percentages and stuff like that as well, right? I don't think I want to really have a speculation business, even though I always call the stock market a casino. But all right, cool. So any other things that you wanted to mention on how people can actually invest with you?
No, that's really it. I mean, this has been a fun discussion. I would encourage everybody at webstreet.co. If you're interested at all in investing or just learning more, check out our site. I'm sure you push this. I've heard enough of your episodes to know educated investor. Being educated is very, very important. So we want obviously accredited investors. We want people to get educated, to talk to our investor relations team. It's not a fit for everybody, but we have been able to give pretty strong returns in the with quarterly distributions, et cetera. And a lot of our investors come back and repeat invest for us. The biggest thing I think it's probably obvious that we've been talking about is this is a way to do it passively. If you're looking for completely passive investment, this is one option. If you've got a bunch of money in real estate or other stock market, et cetera, and you want to diversify, we're just trying to make it an accessible asset class. It doesn't mean it's perfect for everybody's portfolio, but that's what we're offering. That's really about it. If there's any questions that people have that I didn't hit on, I'm always accessible.
Absolutely. And I think that last point that you made would have been exactly what I would emphasize too. It's when we're looking at portfolio, especially when we're looking at cash flowing and appreciating assets, then this is another diversification opportunity, right?
Exactly.
And so, I wouldn't even go as far, and obviously I shouldn't and wouldn't say get rid of your real estate. I'm just saying, okay, if you have built a portfolio that has reached a certain cash flow level, for example, or a certain level of value, and you say, okay, well, I also got my gold coins and I maybe did a little bit of Bitcoin. What else could I do if I don't want to get NFTs or art or stuff like that? Then what you're offering would be something, because it's still on the business ownership side, right, of this quadrant game, so to speak.
Yeah, that's exactly it. Spot on.
Cool. Well, I think that we covered that pretty well. So towards the end of the show, I always ask two questions unrelated really to the investing topic. And the first one is, if you could meet anybody, who would it be and why?
Steve Jobs is definitely one of my idols. I've read his biography multiple times and would love to sit down and just have a conversation with him. He might cut me out and it might be a very short one, but I think that would be fun.
Well, I actually know a few people who knew him and met him and spent some time with him. And I believe today it would be even worse if he were still around. The media has, even at that time, already overdone both directions, right? They overdid this genius level innovator aspect as well as this quote unquote asshole to his people aspect. And I mean, we're seeing it happening live in front of us right now with Elon Musk, right? Like, it's basically
100%.
Steve Jobs times 10 or 20 from a media perspective. I know, like I said, a bunch of people, they met him and he got to know them because they just happened to live in the same general area. So, and they said whenever we met him, he was a totally nice, friendly person. Could always kind of get a little bit of the Indian vibes, you know, so that kind of stuff. He didn't, if you were to meet him, I could not ever imagine that he would just say, oh, you're in software, let me tell you what you're doing wrong.
There you go. I'll double down on that answer then.
No, it's a good person to meet. Okay, and then the last one is, if you had a time machine, Kyle, you could go anywhere, can change the time-space continuum, where would you go and why?
Yeah, this is a good one too. And again, this one might be a little boring, but I just would like to go back. I was born in the 80s, so I can remember not having cell phones for a little bit. I would like to go back to maybe early 80s or mid 70s and actually grow up and see what it was like to be without cell phones, because I just think it changed society so much. Obviously, internet and AI and everything else is continuing to change rapidly, but I think cell phones in particular, just having to make plans with somebody and then go meet them at a certain time and place, I think it would be a little bit simpler, more simple of a world. I'd like to try that out, maybe just for a day or a week.
Yeah, I mean, I was mature, let's put it that way, times, and I can tell you from my own experience, in the early 90s actually, my wife and I came from Germany to the United States. And even though there were like early versions of cell phones, just the sheer fact that you wanted to make a more long distance than from like Savannah to New York kind of call. And the calls were $2.50 a minute.
Oh my gosh. Yeah, 100%. You took that exactly the direction I was thinking. So it's fun to think about.
Yeah, it's totally worth it to see those kind of things. Okay, Kyle, so one more time, how can people get in touch with you?
Yeah, Kyle at webstreet.co is the email. Kyle Kuderewski, I'm sure it's on the title, and LinkedIn. Those are the best two ways. Would love to hear from your audience with questions or just general thoughts on online businesses and anything. So feel free to reach out.
Okay, awesome. Yeah, thank you. And thanks for spending time with us and having a cool conversation with us.
Awesome. Thanks, Axel. Yeah.